What's up, gang? My name is Muhammad Amar bin Muhammad Zahri.
My name is Muhammad Fikri Arif bin Idris.
Assalamualaikum, my name is Radia Takifa binti Muhammad Drins.
Assalamualaikum, my name is Ania Sulaika binti Azura Faizi and I'm from 5A.
Question 1A, goodwill on acquisition of Kelemak Berhad. First, we need to find a consideration transfer because the consideration transfer comprise cash and the form of preference share. Consideration transfer cash we calculate with 60% times 50 million of ordinary share of Kelemak and time 2 ringgit of market price and time 90% and we get 54. And for the preference share we calculate with 60% times 50 million of ordinary share of Kelemak and time 2 ringgit market price and time 10% and we get 6 million. And we also plus non-controlling interest which we get from additional information number 6, 35 millions. And then we have to deduct fair value and asset on 1st July 2019. The total fair value and asset we get from the info on 1st July 2019 is 88 million ringgit. The fair value and asset comprise ordinary share, return profit, under reserve and fair value adjustment. And then we deduct, we get 7 millions, and the 7 million we have to impair 10% and we get goodwill on consolidation is 6.3 million ringgit. Question 1B, gain or losses arising from second acquisitions of Kelemak. The value of consideration transfer had given in question is Rn 20 million. And then we minus fair value and asset on 1st January 2020. The difference fair value and asset on 1st January 2020 and fair value and asset on 1st July 2020 is return profit. The return profit we have to apportion the profit for the year with the half of months of a month, and then we get total fair value and asset on 1st January 2020 is 89.5, and then we have to time 20% because the Alor Berhad acquire another 20% on that date. Then we have to compare the consideration transfer, the Alor Berhad and the fair value and asset of Kelemak. The Alor Berhad loss on second acquisition which is 2.1 million. And then the journal entry we debit non-controlling interest 7.9 million ringgit and debit return profit of Alor 2.1 million ringgit and credit investment 20 million ringgit.
Okay, for question C, we got to determine carrying amount of investment in Malakit Berhad. So what we got here is cost of investment which is 15 million ringgit, and we got profit of the year which is 4. We divide into 2 because of half of the year, then we got 2 million. So we minus with unrealized profit of land which is 1 million, and then we got post acquisition which is 1 million. Then we times with interest in associate which is 30%. Therefore we got 0.3 of share of post acquisition in associate. Then investment cost we plus with share of post acquisition in associate. Therefore we get carrying value of investment in associate which is 15.3 million. Okay, for question D, complete group return profit and non-controlling interest as at 30 June 2020 using the schedule form. For the schedule, we got NCI Kelemak Berhad which we'll get under question A which is 35 million, and then we got preference shares Landu Berhad 50 million, and then we minus with decrease in NCI that we got in question 1B which is 17.9. Then we minus impairment 0.7. But for the impairment, we must divide into NCI and GRP, which is 20% for NCI and 80% for GRP. Then we got 0.14 for NCI and 0.56 for GRP. And then we got return profit of Alor Berhad. For the balance CD, we can get an SOCI, which is on the question, 228 million for GRP. And then we minus with unrealized profit or machine under GRP, we got 4 million. And then we plus over-provided machine. The over-provided depreciation for machine, unrealized profit times the with company policy, which is 10%. So 4 million times 10%. So we got 0.4. And then we plus interest is 0.3, and then we minus loss on acquisition, which we got under question B, 2.1 million. And then return profit of Gajah Berhad. Well, Gajah Berhad for balance CD is 101, and then we minus unrealized profit inventory, which is 20 million minus 50 million, so we got 5 million. And then 101 minus 5, so we got 96. We put under GRP also. Okay, for return profit of Lendu Berhad, the balance CD is 50 million, and then we minus unrealized profit motor vehicle is 1 million, and then we plus over provided depreciation for motor vehicle, which is 0.1, and then we will get 49.1, which will put under GRP. Okay, for return profit of Kelamak Berhad, the balance CD we got from SOCI is 25 million, and then we minus with pre-acquisition, which is also known of return profit of the date of acquisition, which is 22 million, and then we got post of acquisition, which is 3 million. But 3 million we must divide into 2, which because of first acquisition on July until December, the percentage of holding parent is 60%, but on the January until June, the percentage increased to 80%. So from July to December, for the NCI, the 1.5 we times with 50%, so we got 0.6, and 60% of GRP we got 0.9. Then for January until June, for the NCI is 20%, so we got 0.3, and 80% on GRP we got 1.2 million. And then under the schedule we got other reserve, which will be put under GRR. For Alor Berhad we got 30 million, for Gajah Berhad we got 20 million, and Lendu Berhad we got 14 million. But for Kelamak, the balance CD for other reserve is 8 million, but we must minus with pre-acquisition, which is also 8 million, so we got 0. So what the total amount of NCI, we got 67.86, and for GRP 369.8, and for GRR we got 64, which will be put to COFP.
So now, I'll be presenting the consolidated statement of profit or loss and other comprehensive income for the year ended 30 June 2020. So, the first item is revenue. The amount of 42 million, 40 million, 72 million and 26 million are all from the 4 companies, and it was already stated in the previous income statement. Another 20 million that was deducted before is from the goods sold to Lendu Berhad from Gajah Berhad. The total for revenue is 160 million. Now, the second item is cost of sales. The amount of 15 million, 16 million, 80 million and 13 million also from the 4 companies, and it was also already stated in the previous income statement. Another 20 million that was deducted is also from the goods sold to Lendu Berhad from Gajah Berhad, for additional 5 million that was from unrealized profit of inventory, and the total for the cost of sales is 47 million. Then we have to deduct cost of sales with the revenue to get the gross profit, which is now at 113 million ringgit. After that, we added up the gain on disposal, which is at 1 million. To get this 1 million, we will total up the profit of the motor vehicle, which is 5 million as the cost of motor vehicle and 1 million as the profit, and then we deduct the unrealized profit of land, which is at 1 million, and unrealized profit for machine at 4 million. Subsequently, we add up the share profit for associate of Malaikat Berhad at 0.3 million. Last to add up is the investment income. The amount of 5.4 million, 2 million, 5.7 million and 0.3 million are also from each companies, and it was also already stated in the previous income statement. After that, the total of the given amount was deducted with ordinary shares receivable from Kelemak Berhad at 0.64 million. This is the 80% from 0.8 million, and ordinary share receivable from Lindu Berhad at 3 million. We got this 3 million from the half of the dividend paid from Lindu Berhad. Next, we deduct the expenses at 60.6 million. To get 60.6 million, we will total up the expenses from all four companies, which are 14.8 million, 80 million, 20 million, and also 8.3 million. Then we will deduct the total amount just now with the over-provided depreciation of machine, which is at 0.4 million, and also the over-provided depreciation of motor vehicle at 0.1 million. Lastly, we less the impairment of goodwill at 0.7 million. Moreover, the profit before tax is 62.76 million. Next, we have to deduct it with the taxation, which is at 18.3 million. And we will get the profit after tax at 44.46 million. Now, we shall continue to attribute the profit after tax to the parent and the non-controlling interest. Firstly, we have to calculate for NCI. Profit after tax at 3.8 million will be deducted with the dividend paid at 0.8 million. The amount 3 million is apportioned according to the July, December and January, June. For the first half year, July to December, we multiplied 3 million with 6/12 as the half year, and also multiplied it with 40%, and we got 0.6 million. Same goes for the second year, January to June, but we multiplied it with 20%, and we got 0.3 million. Next, we deduct the 20% of impairment of goodwill, and we got 0.14 million. Lastly, to get the profit after tax attributable to NCI, we have to add up another 3 million from the preference shares of Lindu Berhad. Before that, the amount of dividend paid, which is 0.8 million, should be multiplied to 20%, and the amount now is 0.16 million. This amount should be added up as well. The amount of profit after tax attributable to non-controlling interest is now 3.92 million. So for profit after tax parents, the amount of to get the amount of profit after tax attributable to parents, the profit after tax should be less with the profit after tax NCI, which is 44.46 million, will less with 3.92 million, and we will get the profit after tax attributable to parents equals to 40.54 million.
Now we continue with the question F. Consolidated statement of change in equity for the year ended 30 June 2020. We have a GRP and NCI. For GRP balance, we look at the work 2. We got a retained profit for Alor, Gajah, Lendu. For Alor, 218 million. For Gajah, 19.5 million. For Lendu, 25.5 million. Then we total up them, we got a 338.5 million. For the NCI balance, we got a Lendu for use the 100% preferences, and we got 50 million. And we need to add the acquisition during the year. It's only for the NCI, we got 35 million. Then we need to minus the second acquisition for the Kelamak Berhad. For GRP, we got 2.1 million. For NCI, we got 17.9 million. Then we got the profit for the year, 40.54 million for GRP. For the NCI, 3.92 million. Then we need to minus the dividend paid. For GRP, 7.7 million, and NCI 3.16 million. Then we got the balance for both GRP and NCI. For GRP, 369.74 million. For the NCI, 67.86 million. For the last question, question G, consolidated statement of financial position as at 30 June 2020 for Alor Berhad and its subsidiary. For equity, we have ordinary share capital 400 million, 6% preferential 6 million, GRP 369.74 million, NCI 67.86 million, GRR 64 million. For liabilities, we have long-term loan 84 million. For current, we have current liabilities 45 million. Then we total up them, we got a 1036.1 million. For non-current asset, we have PPE 555.5 million, investment in Meleket 15.3 million, goodwill 6.3 million, other investment 281 million, intangible 77 million. For current assets, we have trade receivable 33 million, other current assets 68 million. Then we total up them, non-current asset and current asset, we got 1036.1 million. Then our statement of financial position is balanced. Thank you.
Question 2. Encik Hamad was contacted with an idea that the investment in TG Berhad should apply acquisition method, and the financial statement of TG Berhad should be consolidated with the Usaha Maju Berhad in accordance in MFRS 10. In accordance standard MFRS, the investor should acquire ordinary share more than 50% to apply the acquisition method and to make consolidated statement with another company. In this project, Usaha Maju Berhad had a contractual agreement with Azek Berhad and Berkat Berhad. Among of them, Usaha Maju Berhad is the highest investor in TG Berhad, which is 40%. Since the decision relating to TG Berhad related business operations need an unanimous consent of all control sharing companies. This characteristic can be defined as a joint arrangement in accordance MFRS 11. The control agreement between the three is at least 80% voting rights are required to make decision about the relevant activity of the arrangements. Joint control exists where the party contractual agree to share control, and the decision about the relevant activity of the joint arrangement have the unanimous consent of all the party sharing control. No single party control of the agreement on its own, but a party to joint control can prevent the other party from controlling the arrangements. And Usaha Maju should not apply acquisition method in accordance MFRS 10. Instead, they can apply equity method under MFRS 128, which is investment in associate and joint ventures, and they will recognize their own financial statements with separately in the joint arrangement. The Maju Berhad need consent from all parties who jointly control in TG Berhad if they want to apply acquisition methods or consolidated financial statement in accordance MFRS 10.
Okay, for question 3A, we must calculate gain or loss of the disposal share. So first, let me explain the relationship before and after disposal made by Highland Berhad. So on 2014, Highland and Tua Berhad relationship is parent and subsidiary. So Highland Berhad has control over Tua Berhad since the Highland Berhad interest in ordinary share of Tua Berhad is 80%, which is 32 million divided by 40 million of ordinary share of Tua Berhad. And then on 1st July 2018, Highland Berhad planned to dispose 90% of ordinary share of Tua Berhad. So Highland Berhad and Tua Berhad relationship is between investor and simple interest. So Highland Berhad has no control over Tua Berhad since Highland Berhad has only remaining 8% in ordinary share of Tua Berhad. Okay, for the goodwill on the date of acquiry. So first we got consideration transferred, which is 100 million, and then we got non-controlling interest, 20% of FB&A, which is 140 million. So we got 22.8 million. So we add, and then we got 122.8 million. And then we minus fair value net asset of subsidiary. So we got share capital 40 million, we got return earning 42 million, and then we got ARR land for 20 million, and we also got general reserve for 12 million. So we got 114 million. So for the 122.8 million, we minus with 114 million, we got a goodwill for 8.8 million. Okay, disposal of share on the 1st July 2018. So the profit is 160 million, and then we got fair value of remaining assets 6.4, which is 8%, we times with 2 ringgit per share, and then we times with 40 million. So we got 166.4, and then we minus with fair value net asset disposed. The first one is share capital 40 million, and then return earnings 80 million, and then we got profit of for the year 10 million. So we got fair value net asset disposed 130. So we times with 80%. For group, we got 104. So 166.4 we minus with 104, we got 62.4, and then we minus with 8.8 of the goodwill, and then we got 53.6.
I'm continuing question 3B. Discuss the effect of the implementation of the plan to the group's financial statement as at 30 June 2019. If Highland Berhad acquire 80% of the ordinary shares in Tuah Berhad, the total shares acquired would be 72%, and Tuah will become subsidiary of Highland Berhad. Therefore, Highland Berhad will be consolidated for 1 year, and the gain or disposal on virtual sale of investment will be 53.6 million, and it will be accounted in the CSOPL. Thank you.
So last question, the question asks whether Kencana Berhad has a control over Seroja Berhad on 1st January 2019. Right, MFRS 11 joint arrangements establish the principles for financial reporting by parties to joint arrangements. A joint arrangement is an economic arrangement where there are two or more parties who have joint control. According to MFRS 11 joint arrangement, the characteristics of a joint arrangement are the parties are bound by a contractual arrangement, and the contractual arrangement gives two or more of the parties joint control of the arrangement. In this case, it can be deemed that Kencana Berhad has a joint control with Seroja Berhad. This can be shown as the two investors held equally the remaining ordinary shares. Next, the joint control exists where the parties contractually agree to share control and decisions about the relevant activities of the joint arrangement have the anonymous consent of all the parties sharing control. It can be proved when Kencana Berhad was granted by the shareholders agreement the right to appoint, remove and set remuneration of management responsible for directing relevant activities for the associate or the joint venture. Hence, Kencana Berhad has control over Seroja Berhad on 1st January 2019 as there is a contractual agreement between both companies. Thank you.